So welcome. My name is Ellen and I'm the Partner Marketing Manager at A2X, and I'll be moderating today's webinar. So how to tame payment gateway reconciliation for e-commerce. Now it feels like every second month there's a new payment gateway popping up. So we're lucky to have Teresa join us today. She'll be sharing step-by-step advice on reconciling transactions from the popular gateways Stripe and PayPal. So, a little bit about Teresa. She has nearly a decade of experience in the e-commerce accounting niche and 35 years in accounting. She runs a successful e-commerce bookkeeping practice called Financely, and she's also the very smart brains behind the e-commerce training academy. So we're all in very good hands. Now, before I hand over to Teresa, just a bit of housekeeping. As Teresa just mentioned, if you do have questions, please write them in the chat. You can write them to everyone, or if you're shy, you can write them to just us. I promise we'll be nice. We'll address them throughout, but if we don't get to your question, we'll have time at the end. We'll also be sending this recording to everyone, and you'll also hear more from Teresa about her training academy. Cool. So over to you, Teresa.
Awesome. Thanks, Ellen. I'm really excited to be partnering with you guys. A2X, we love A2X. And Ellen specifically. So thank you for inviting me to do this webinar with all of you. But allow me to take a moment and introduce myself a little bit more. Again, my name is Teresa, and along with my sister, Connie Smith, we are the owners of Financely Bookkeeping Solutions. We are the Canadian leaders in e-commerce bookkeeping for Shopify and Amazon. And Connie and I started Financely almost 10 years ago now. And, you know, back then we didn't have a niche at the very start. We pretty much would work with any client that needed quality bookkeeping work. But at the same time that I started Financely, my daughter got a career at Shopify. So of course, over time, we started learning more about Shopify and you know, for fun, I created a store for my artwork that I paint, I do crafts. So I decided to make myself a little Shopify store just to play around with it, and kind of fell in love with it. So we started offering that as a service where we would help businesses get their Shopify store set up. But you know what? We're bookkeepers. So the next thing was, all right, how do we get all of that really important financial information out of Shopify and into the books? And with that, our niche was born. And, you know, we have definitely noticed over the last number of years that there is a real need in understanding the complexities of e-commerce accounting. And, you know, our accounting colleagues have learned that we are the go-to experts for e-commerce accounting, and we are so honored when they bring their clients to us for assistance. You know, when we started, it was just Shopify. And we became known for that. And then one of my accounting colleagues called me up and said, so I know you do Shopify, but what about Amazon? And we kind of went, sure, that sounds like fun. And it actually was fun because Connie and I had never even bought anything on Amazon before. So for us, it was a completely different animal. So I did the smart thing. I started buying stuff on Amazon. It was cool. Stuff would just appear at my door like the next day. I don't think my hubby was too pleased with me, but, you know, I told him it's research. I had no choice. I had to do it. Okay. Don't tell on me, Ellen. Okay. But, you know, over the years, we have learned all kinds of different platforms. We work with clients with Walmart and Etsy and eBay and Best Buy and Ravelry and all kinds of things. But I do have to say that the majority of our clients are on Shopify and Amazon and those other platforms. And I have to say, we are loving our journey of focusing our business on e-commerce sellers and on the accounting professionals that love them. So just a quick agenda for what we're going to cover today. I will give you just a little bit of an introduction to payment gateways. Then we'll talk about a couple of them and the pros and cons of them, the intricacies of using them. Then I'm going to show you how to reconcile those gateways. And we will talk a little bit about clearing accounts and how to use them to streamline your work. And I will pause at various points to check and see if we have any questions. Ellen will be keeping an eye on the Q&A and the chat box and will let me know if we have any questions to answer. And again, we'll do our best to answer during, but if we can't, we will save time at the end. Now, this session has been designed for accounting professionals, but I can also say if you are an e-commerce business owner, this session will help you as well with how to manage these, though we always recommend business owners engage with a professional accounting service provider because of the complexities of e-commerce. So welcome to the wonderful world of payment gateways. Now, there are just so many of them. We truly could not cover them all today, or we would be here for the next 24 hours. But I picked a couple of the most commonly used ones. And when it comes to payment gateways, I find that sometimes business owners and occasionally accounting professionals will confuse the payment gateway with the e-commerce platform that is using the payment gateway. So for example, on Shopify, you can attach any number of these gateways, such as PayPal or Authorize.net or Apple Pay or Shop Pay or Sezzle. There's lots of different gateways that you can attach. Moneris, there's piles of them. So that is the payment processor attaching to the e-commerce platform. But sometimes the payment gateway is actually built in and part of the platform. And this is most common with what we call marketplaces, things like Amazon or Etsy. When you sell on Amazon, you only have Amazon as the payment processor or the payment gateway. You can't decide to use something else. So you can't go to your Amazon account and say, oh, I'm going to use Stripe. I'm going to attach Stripe. That isn't a possibility. You simply get your payments through Amazon. And then there is another category of apps that are not true payment gateways in the true sense, I guess, but they allow your customers to offer different payment options, things like monthly recurring subscriptions or installment payments, 4 easy payments of $30 kind of thing. These are apps like Sezzle or ShopPay or Recharge. They attach to the client's e-commerce store and allow for those different types of payment options. Payment gateways really are a critical aspect of selling online. Our clients need reliable, stable, trustworthy, seamless payment gateways that give their clients the opportunity to buy from them. And we love that for our clients and for their customers. However, as accounting professionals, they also mean more complexity in the work for you. So let's take a look at a couple of the most commonly used ones that we see our clients using. Stripe. Drop in the chat how many of you have clients using Stripe. Just put a yes if you have clients with Stripe. Stripe is a very common gateway. Yeah, okay, that's good. So some of you have experience with Stripe. Stripe will connect to your client's sales platform as a payment method. So for example, did you know that Shopify Payments, which is the built-in payment processor in Shopify, is actually powered by Stripe? That's what's running underneath it. And Stripe allows businesses to accept credit cards for online sales. Stripe also does have both online, but a POS terminal. So that's a point of sale terminal. So your client can have Stripe on their e-commerce platform, but if they also have a physical store or they do pop-up shops, they can also have a physical terminal where they can swipe and accept payments. Stripe really does have good reporting, which makes it, easier to work with and easier to reconcile. So I thought I'd give you an overview of Stripe for those of you that may not be familiar with it. When you first log in, this is the main screen on Stripe, and you've got the menu down the side. The home screen gives lots of good stats for your client. The payments tab, this is where you can see all of the individual transactions that have processed. Balances, this is where you can see the current balance sitting in the Stripe account that hasn't been paid out to the client yet. Customers is where you can see all the client information and their details and any purchases they have made. I find that really helpful sometimes to be able to go into the client file and see, oh, okay, there was this payment. Oh, there was a refund. Oh, that payment failed. I like that about Stripe. You can see that information. There's a newer section called billing where you can now do invoicing. So you can invoice your client right from Stripe. We couldn't do that a few years ago. They now have subscription billing, so you can do monthly billing and quotes. And there's a more tab with all kinds of other stuff that your client may need. The next piece down is recent, and this is just a quick view of the most recent things that have happened. Subscriptions is where you would manage any subscriptions if your client is doing that. And then you'll see tax. This came out, I think, last year, Stripe tax. And it's awesome. It's very cool. We're glad they added that where you can manage tax within Stripe. Reports, that is actually as an accounting professional where you will spend most of your time. And lastly, you'll see the product catalog, and this is where your clients can add in their products. So as an accounting professional, to get the reporting you need, you are most likely to click on reports and then go to balances, and that's where you'll be able to get the reports you need to reconcile a Stripe account. When you go into the balance report, this is what you're going to see. And this report will give you everything you need. It is split into 3 sections. When you come in here, you can choose the date range that you want, and you can download and get the information you need. In a little bit, I'm going to show you exactly what to download to reconcile. So let's look at some of the pros and cons of using Stripe as a payment processor for your client's e-commerce store. On the pro side, as I said earlier, I think it has good reporting, which leads to a quality reconciliation. For the client, it is easy to integrate it onto their e-commerce platform. I find the Stripe fees are very similar to a lot of the other processors. It does have that nice POS, point of sale terminal for taking in-person payments. It's definitely well known and trusted. You do have the option to add in inventory as well if you want. It handles multi-currency quite nicely. It's very good at it, which we like. That new billing section, I think, is a plus where you can send invoices or have recurring subscriptions and things like that. I think that's a positive. And the new Stripe tax. So before you couldn't really do anything with tax, but now you can turn on Stripe tax and Stripe will calculate the tax. Now there is an extra fee. I think it's about 0.5% on all transactions with tax. And then when it's over 100,000 US, I think it goes to 0.4, which is great. So you can actually have your taxes done correctly. Now on the con side though, Stripe doesn't really connect into the books, so you can't have a Stripe bank feed. So you do need to use an integration app or a connector app that will bring the data from the platform into the books. And then with Stripe Tax, when this first came out, we got very excited because there are e-commerce platforms that don't manage tax very well. We thought, oh my gosh, this will fix it. We're so excited for our clients that are selling on platforms that don't do tax. Like Kajabi is one of them we run into. But when you attach Stripe as a payment processor, the Stripe tax does not work. It's really designed for if you are billing out of Stripe. And that does make sense because it is making the assumption that the taxes are being handled on the e-commerce platform. So it is great that it has tax, but just understand when it is used as a payment processor, the tax has to come from the e-commerce platform. So Bean Ninja said Stripe connects to the bank in Xero. That's nice. I'm glad to hear that. We use QBO, so that is a nice advantage of Xero. Nice to hear. So let's look at some of the unique challenges. Well, it's not a real challenge, but Stripe doesn't have what we would call a traditional bank statement where you have an opening balance and then you have all the transactions and then you have a closing balance. You need to run 3 different reports to get all of that information, and I actually will show you exactly how to do that in a few minutes. And when it comes to connections, if it's QuickBooks, you cannot connect it in, so you do need to use an integration app, but apparently with Xero, it connects, so that's cool. I think Stripe is a great platform. I highly recommended. It's very stable, quality reporting. You just have to understand how it works. So let's take a look at how you would reconcile your client's Stripe account. Now, Stripe pays out the balance that's in the Stripe account, less their fees or any returns to the client's bank on a regular basis. It differs a little bit from PayPal, where PayPal is really just another bank account. Stripe is a true gateway and always does pay out the balances to the client's bank. And when it comes to using Stripe as a payment gateway on your client's e-commerce platform, we need to consider what integration app are we using to bring the sales data into the books, because that is going to affect the reconciliation process for Stripe. So if your client is, for example, using A2X, A2X does lump sum journal entries based on Stripe sales for a specific period, like daily, weekly, or monthly. These entries are not based on the payout that is done by Stripe, like it would be if A2X was doing Shopify payments or Amazon. So therefore, if you're using A2X or another lump sum integration app, you do need to use a Stripe clearing account. The A2X entries would drop the sales information into the clearing account. Then you would set up a rule to automatically do transfers from the clearing to the bank based on the payout. You would also need to enter the Stripe fees, so record that as an expense that is paid from the Stripe clearing account. And that should clear out your Stripe clearing account and ensure you have all the correct information to reconcile. Now, this is the process we would have to use for QuickBooks Online. It sounds like Xero would have a different process. So now let's look at apps that might do a transactional entry into the books. So it's taking all the sales from Shopify and it's doing individual entries into the books. It might be creating sales receipts, or it's doing invoices and payments. And it would record the payment as paid by Stripe. You would need to set up a Stripe bank account in the books, and then the invoice payments or the sales receipts, they would indicate Stripe Bank as the payment method. Then often some of these apps will also record the Stripe fees automatically as expenses. Some won't, but some will. And some of these apps will even do the transfers from the Stripe Bank to the client's bank account based on the payouts. So depending on which app you're using will determine, how much of it you're doing manually or how much you need to it just happens for you, right? Now to reconcile your client's Stripe account, you want to log into their account. We always recommend wherever possible that you have your own login with restricted access so that you can get the reporting you need. And as I mentioned earlier, you would go to that reports tab and then to balances. Then you would want to choose the time frame. So for example, December 1st to December 31st. Stripe will take a moment to generate the reports for you. Once the reports are generated, you'll see it split into 3 different sections. There will be a balance summary section, then a balance change from activity section, and then a payouts section. You will want to click download to get the summary report to start with, and it looks like this. So you'll see that there's an opening balance, there's activity, there's fees, and there's an ending balance. So you need that information to do your reconciliation. Then under section 2, this is the balance change from activity. This is where you would gather all of the individual entries for the month. So each sale or refund, anything like that, all of them would be listed there. Now, if you're using A2X, you don't really need this because we're doing summary, but you may need it if you are using a different app. But to get the correct report, you don't want to click on the download that's showing right beside where it says balance change from activity, where you basically get what you're seeing on the screen. Instead, if you sort of hover your mouse over the charges line, a second download button appears, and that will give you the details of every transaction. It does let you customize the report before you grab it. I always like itemized if I'm doing this because the summary information I already have. This one would give me all the details. I always tell it, give me all the columns. I'll take all the information. I'll decide what I need and don't. And then download. And now you have all the individual entries. And then lastly, section 3 is the payouts, and you would choose download, and you would get a detailed list of all the payouts that happened that when the money came out of Stripe and went into the client's bank account. Now with these 3, you have everything you need to reconcile your client's Stripe account. And once you've used your integration app and you brought all the sales over into the books and you've downloaded your statements, you want to do the following. If you're using A2X or a lump sum, you really only need the summary data. When you're using this method, you're not reconciling to each individual sales receipt. You are using that summary balance information. The opening balance shows on the statement, and that should match what you're seeing on the reconciliation screen in the books. Then you would enter your closing balance from the statement. You would then check off all of your A2X journal entries, the expense entry you created for the fees, and all the deposits that were transferred from Stripe to the bank account. And with that, you should be able to reconcile. Now, if it doesn't reconcile, you can drill into the details. You can open up the A2X entries, see the details. You can open up Shopify and see the details to figure out where those discrepancies might come from. Now, if we were reconciling using an app that was individual entries on that Reconcile screen, you can verify that the opening balance matches what you have on the report, enter your closing balance. Now, in this one, you would use that detailed report that we downloaded, and you would check off every sale, every refund, all the transfers to the bank. And with that, it should reconcile. But if it doesn't, again, you can look at the details to drill in and find out where are my discrepancies. Now, we actually teach a whole session in our Advanced Academy that is called When Things Go Wrong with Reconciliations. And we teach you a whole bunch of strategies to use to figure out why are things not reconciling. So that's what I wanted to talk about with Stripe. So I thought I would pause for a moment. Ellen, did we have any questions we need to address in the chat or?
No, a couple of questions around, if we could do this for Xero specifically as well. So they love the topic. But yeah, no, you're good. Has anyone got any questions they want to quickly write in before we get on to the next topic? I think.
Sounds like we're okay for
Good
now.
to go.
Excellent.
Yeah.
Okay. So now let's talk about PayPal. Drop in the chat how many of you have clients that are using PayPal. I bet you lots of you do. I would be surprised if you didn't. As we all know, PayPal is definitely a very commonly used payment gateway. And there are lots of complexities with PayPal depending on how your client is using PayPal. The reason I think PayPal is so popular is it's very easy to get an account set up and get working with it and getting paid fairly quickly. So they do make that process fairly easy. PayPal is worldwide, accepts all the currencies. It gives buyers peace of mind because there's still lots of people who aren't that comfortable entering their credit card information online. Using PayPal allows them to use a bank account or a credit card to fund their PayPal account. And that, of course, keeps their credit card information or their debit information confidential. And clients still like that. So let's take a little bit of a tour of PayPal. When you first log into PayPal, and again, I always recommend get your clients to give you limited access so that you can get the information you need without counting on them, or you just have to count on your client, and I just find that takes more back and forth. When you log in, you can see the current balance, and lots of quick links that make things easier. So for example, if your client is doing recurring payments on PayPal, you can click into there and have all the details about recurring payments. As an accounting professional, you are most interested in the activity section. Then you would choose all reports. Then under payments, you want to grab the statement. So it does say statements, monthly or custom. And that's going to generate a bank statement for the month. The PayPal statement is what you need to use to reconcile your client's account every month. And I'm going to show you how some different ways of doing it. Let's talk about some pros and cons of PayPal. If any of you have been struggling with PayPal, I would love it if you drop in the chat, like what has been your struggles with PayPal? So on the pro side, what do I think is good about PayPal? Well, I think it has relatively good reporting that allows for a reconciliation, but it definitely could be better, especially around multi-currency. For clients, it's easy to attach PayPal to their e-commerce platform. I find the fees are, fairly similar to all the other ones that are out there. It's definitely well known and trusted. It handles multi-currency without any issues, but the way it handles it can make it really hard, especially if you're not familiar with it. I know when we started with e-commerce and with PayPal and started seeing all the multi-currency, it was quite confusing in the beginning to follow how it works when you've got multi-currency stuff going on. You can configure sales tax in PayPal, but be careful not to duplicate. So if you've attached PayPal to, for example, Shopify is handling the sales tax. You wouldn't want to duplicate that in PayPal. So be careful of that. And PayPal does connect into the books. For us, it's always QBO because that's just what we choose to use. I'm sure it connects into Xero as well. I'd be very surprised if it doesn't. Now, on the con side, although your client's account will connect to the bank feed, you need to be very careful with multi-currency because of the way it handles it. Now, we'll talk a little bit more about that later. Multi-currency sales coming in through PayPal can be a little bit challenging until you get used to it, depending on the integration process that you've set up. And the multi-currency exchange rates between currencies in PayPal can be higher than what your client may pay at the bank. And again, unless you have your own login, you do need to make sure the client is sending it to you so that you can do your accounting work and your reconciliations. So let's talk a little bit more about some of the challenges around using PayPal. Now, when PayPal connects, now I'm going to talk QuickBooks Online, and if it's all one currency, you are absolutely golden. You have everything you need to reconcile the account. You can set up lots of great automations to save yourself time when it's all in one currency. But when it comes to multi-currency purchases, so your client, let's use an example. I'm in Canada, so we'll use Canada as an example. Let's say my client has a Canadian PayPal account, but they buy something from the US. PayPal will automatically create a USD PayPal account within the Canadian account. If your client now buys something from Europe, it's going to create a Euro PayPal account within the Canadian PayPal account. And often this is okay on the purchasing side because PayPal will automatically convert amounts back to the home currency to cover that expense. So it's either going to, put it into Canadian and take that expense out of the Canadian account, or if there isn't money in the Canadian PayPal account, it's going to go to the backup funding account. So it'll go to the bank account and move money into the Canadian PayPal, or it'll go to the credit card and move money into the Canadian PayPal. The challenge is following the money through the statements if you're not used to it, and then matching it up to the receipts that you've received. So for example, your client might have uploaded a receipt in euros for a purchase. You will see that amount listed on the statement in euros. Then a currency conversion over to the home currency. and a payment or a withdrawal from a bank account or credit card if the funds weren't there. So you can see it's transfers coming through, one from the bank into Canadian PayPal, and then a currency conversion to another one. So it's multiple entries to record that. The challenge we have with QuickBooks Online is that the bank feed brings all the entries in their original currency, not converted to the home currency. So you would see in the feed all kinds of, in this example, Canadian entries. And then let's say it was $100 US, it would bring in $100 into that Canadian feed. And we know in Canadian that was $133. So you have to be very careful with the bank feed when it's connected to QuickBooks Online. I'm interested to hear how Xero does this. So for my Xero friends here, do we have that problem with Xero? Because I'd love to know. Okay. So you have to be really careful if you've connected it into the bank feed.
We do actually have a question that
Oh,
Teresa
okay.
found, just the multi currencies transferred. Eric has asked that he has a client who has an automatic transfer into their bank from Great British Pound receipts, but other currencies have to be manually transferred. Can all currencies be automatically transferred?
Yes, I was gonna mention it later. There is a setting within PayPal
Oh,
that allows you to say, do not hold funds in a foreign currency, because that is the standard. You can tell it to automatically always move everything to the home currency, and that can help avoid that. So that is one of the strategies we use. Okay. All right. So when it just coming back to the purchases, sometimes you'll have to turn on multi-currency in the books to be able to handle this, so that you've got a Canadian PayPal, a USD PayPal, and a Euros PayPal, and then you can reconcile those separately. Sometimes you don't need that. Again, if everything's converting back to the home currency and it's only on expenses and purchases, you don't necessarily have to do that. But now let's talk a little bit about multi-currency sales, because that's a little bit more challenging. So I think it was about 2 years ago, Shopify decided to just automatically let everyone check out in whatever currency they wanted, which is very nice from a buyer's perspective, right? However, if that client chose PayPal as how they were going to pay for that order, the way PayPal handles multi-currency, you're going to see the sales showing up under those sub-accounts, right? So let's pretend it's a Canadian PayPal again, and it was a US client that purchased on Shopify. On PayPal, you would see $100 sitting in the US section as money received. The issue that we have seen is that Shopify does convert the sales back to the home currency of Shopify. But PayPal would be keeping the payment of that sale in the currency that it was originally done in. You now need a method to determine what the Canadian amount was that Shopify converted to, which will likely be a different currency conversion than PayPal would use. So that can be a little bit fun, and I will show you a little bit more about that later. Next challenge is just around the statements. QuickBooks does not fetch these statements. So you would need to be able to either have a login so you can grab it yourself, or making sure the client sends it to you. And then with connections, again, PayPal does connect into QuickBooks. It connects into Xero. But you do have to be mindful of the multi-currency challenges that we see. But really, PayPal is a great system. And even though it is more complex, we do, as accounting professionals, need to be well versed in it and come up with strategies to streamline this work for our e-commerce clients. Now, the one thing that we do within our firm is we actually have 3 sets of charges around PayPal when our clients are using it. We have a charge around how many PayPal accounts, how many multi-currency sub-accounts do they have, and are they doing multi-currency sales? And all of these add an additional charge to really account for the complexity around managing that work. Now let's look at reconciling PayPal. I just want to see what we said about Xero here. Xero allows us to set up multi-bank accounts for PayPal. And when you link to the bank, you map to the various currency accounts and then you create. Oh, can I say hallelujah? That sounds fabulous. It's like, might have to look at Xero. Okay. All right. Let's talk about reconciling. Definitely, PayPal can sometimes be one of the hardest platforms to reconcile, but really when it's one currency, it's quite simple. It is not hard to manage the reconciliation if everything is happening in one currency. PayPal is a payment gateway, but it's also a bank account, just like any other bank account you would have. So we as accounting professionals need to be reconciling the PayPal bank as we would with any bank account. And when you have PayPal linked into the books and there's a bank feed and that bank feed is all in one currency, it's fairly simple depending on which e-commerce integration app you're choosing to use to bring the sales into the books from the e-commerce platform. We can use the bank feed and we can use bank rules to really speed up the work. So let's look at if we were using an app that does individual transactions, so individual sales receipts or individual invoices and payments. If you're doing that, then you would want to record them as paid by PayPal Bank. Oops, hey, my slides are going crazy today. Many of these integration apps that do individual, they will also enter the fees for you. So those expense entries can happen automatically. And if that's the case, once you've used your integration app to bring all of the data over into the books, you simply go to the bank feed and click match, 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 match on all the sales and then on all the fees. Then if the client is using PayPal for purchases, you would want to make sure you've recorded all of those expenses as well. And hopefully your client has sent you all the receipts to go with that and you're using something like Dex Prepare or HubDoc or Book.ai, anything like that that helps you speed up the processing. And once that bank feed is clear, you're now ready to reconcile your PayPal using your PayPal statement that you would have downloaded. So to get that statement, as long as you have access, again, you're going to go to activity and then reports and then choose the statements monthly. You would then choose your date range. And you do have a choice. I like to download both. I like the PDF, but I also will grab the CSV as well in case I need it. And then you're simply going to use the reconciliation feature in the books to, grab the statement. You're going to enter the closing balance for PayPal, check off all the entries that have cleared, and you should be good to go. Now, we assume that you all know how to do a bank reconciliation in Xero or in QuickBooks, so we're not going to walk through that part of the process because we think you already know how to do that. But the reality is that most of our e-commerce sellers have a multi-currency PayPal account, and this is where it can get a little bit challenging. Now, I know this is in French. I apologize. This is one of my French clients. And actually, for a while, PayPal in Canada, no matter what, no matter where you were, we were getting it all in French. So it's in French. If your client has their settings, as I mentioned earlier, the standard setting in PayPal is to keep balances in foreign currencies. So when you have a multi-currency PayPal, some of the strategies to avoid having, 25 PayPal currencies showing on the statement is to change that setting to not keep balances in foreign currencies. And with that lovely Shopify feature of everybody checking out in whatever currency they want, it's going to be creating those balances in foreign currencies if you don't change it. And since we have balances in foreign currencies, you'll want to set up different PayPal accounts in the books, a PayPal Euros, a PayPal US, PayPal Canada, whichever ones you need. Because if there's balances, we need to be reconciling to those balances. Okay. I am aware that PayPal does charge an extra fee if you do change it to not keep funds in a foreign currency. But I imagine that fee might be less than paying your accounting professional to reconcile and manage 15 different PayPal accounts. So you do have choices in PayPal. But if your client's on Shopify, you can also control that on the Shopify side under markets. That area allows your client to dictate what currencies they will allow. Instead of everybody in every currency we accept, you can restrict that and say, I only want to accept USD and euros, or I only want to accept Canadian and USD. And that can allow the client to manage how many currencies are carrying balances on PayPal. So let me show you an example of one of my small sellers. Again, it's French, so I kind of wrote in English what's happening there for you. This is the Euro section of one of my small Shopify clients. And we see that there are expenses being paid in euros, which is not really an issue because what we see is that it's going in and coming right out again. However, if you look at the 29th of September, we can see a Shopify sale in euros. So this sale was 89.91 euros less 421 euros in fees, leaving a balance of 94.70 in a euro PayPal account. We don't see a transfer out like we do for the expenses. So now we need a method to track and reconcile this euro sale. And we will need to set up a PayPal Euro account in the books and reconcile that. To make this a little bit more complex, if this client's Shopify store, well, this specific client, her store is Canadian. So although Shopify is now letting people check out in whatever currency they want, Shopify is automatically converting that sale into the home currency of Shopify. When your integration app picks up the sale, it's picking it up in whatever the home store currency is. So now you have a sale where the payment is in euros, but the actual sales record brought into the books was brought in Canadian or in US or whatever that home currency is. So to reconcile this entry, we need to be able to match the exchange rate between Shopify and PayPal, and they will not be the same. So you likely will have to do an adjustment with exchange gain and loss to make the sale and the payment match up. To figure that out, you might have to, go into Shopify, find the sale, figure out what the exchange rate was, and then when you're doing the payment side of it, you need to make an adjustment with exchange gain and loss to make the two line up. Now, there's lots more to talk about, but we're trying to keep it short. So I hope that sort of helps you understand some of the challenges that can be seen there. So now let's look at if we were using an app like A2X for Shopify. With A2X, it's doing lump sum journal entries. And for these third-party gateways like PayPal, you can summarize it by the day or by the week or by the month. In this case, our reconciliation process is just a little bit different. So let's look at an all one currency example again. This would, hold true if it was all USD or all Canadian or all whatever it is. For this one, since A2X is doing those lump sum journal entries, and that's not how the sales will show on the PayPal statement. In this case, we want to use a PayPal clearing account. A2X will drop the lump sum payment for those sales into a PayPal clearing account for all the PayPal sales for that chosen period. If you have your client's PayPal account linked into the bank feed, you can set up those bank rules that will automatically do transfers from PayPal clearing to the PayPal bank for each of the individual sales entries. This should clear out the PayPal clearing account. You can then also set up a rule in the bank feed to automatically record the PayPal fees as expenses. And you've now dealt with the sales, you've dealt with the fees. You just need to review for any purchases and make sure those are recorded. And you're ready to use the PayPal bank statement to reconcile both the PayPal bank account and the PayPal clearing account. But again, multi-currency can be an issue just like we talked about earlier. Now, this all sounds fine for a tiny little client who might have €1 or €2 sales. What about clients that have thousands and thousands of PayPal transactions per month? This method of checking the currencies, and it's not going to work. It's going to be very cumbersome. So we actually teach a different method of handling PayPal for large clients that have lots of transactions. We call it the summary method. Unfortunately, because of our time constraints, I can't teach you that today. So if that's something that interests you, please reach out. Or of course, you can always choose to join our e-commerce training academy, and we teach it to you in detail. It's interesting, that's actually the topic we're teaching next week, is all the intricacies of PayPal and how to do these larger reconciliations. So let me see if we have any questions. Amanda says, with PayPal, the disputed charges can create confusion. You're absolutely right. It definitely can cause confusion. I have to agree with you there. Is there any other questions, Ellen?
Not just that one from Eric that I popped in
Yeah,
a bit earlier, but you answered, which was very helpful.
perfect.
Cool.
Wonderful. Awesome. Okay, so before we talk about how to use clearing accounts to streamline and automate your work, I thought I'd take a couple of minutes and just tell you a little bit about our training academy. This is designed for accounting professionals, not for business owners, because we assume you already know how to do accounting. We're just taking it to the next level with the complexities of e-commerce. So let me tell you about what we do to help you. You know, at Financely, we really are passionate about our accounting community. We love our community and we want to help them. So we offer some different ways to do that. The first is, if you have a client you're struggling with, we will work with you to create an integration strategy that will streamline and speed up the bookkeeping work while making sure your client is getting excellent, high quality financial information for their business. This is done as a one-off program. But we are also offering our e-commerce training academy. And you know what? Each and every one of you are invited to come and join us. Each month, Connie and I will provide you with live training that is in depth on all the various aspects of e-commerce accounting, from sales and integrations and inventory and managing payment gateways and how to do the different platforms. You do get access to the recordings and lots of downloadable tools and resources. We even give you an MP3 audio file if you like to listen. And as a special bonus, just for being here today, if you follow the link that's on the screen right now or scan that QR code, you can grab my ebook called The 6 E-Commerce Accounting Complexities You Need to Know About. It's just my gift for you for being here. When you go to that site and enter your email, we will immediately send you my ebook, as well as some further information about the Academy, so you can learn a little bit more there. And, you know, because of our partnership with A2X, and we wanted to do something really special just for you guys, if you do choose to join the Academy, we are offering a 20% discount for life. So what that means, if you use that code, is you save 20% and your price will never go up. The Academy price does go up. It has gone up twice in the last 3 years, but your price becomes locked in for life. So if that interests you, grab that code, write it down so you don't forget, because we wouldn't want you to miss out. Now, my email is on there as well. So if you do forget the code, you can send me an email. But, you know, if monthly learning isn't for you, if you're like, I need to learn this now, I can't wait, we do have a course that you can choose to purchase. It is 10 months of training all at once. You get all the modules all at once. You can binge watch it over a weekend, download all the resources, and you will have that learning automatically. Now, what you don't get is the rest. We have about 4 years of sessions, so we take your knowledge deeper and deeper. And as things are changing, every month we are updating our materials to what is currently happening in the world of e-commerce. So you don't get that with the course, and you don't get access to, of course, live sessions where you can ask questions and all of that kind of stuff. Our goal really is to help as many accounting professionals as possible get great at e-commerce accounting. We want to relieve your stress, and we want to help you to build a thriving accounting business in the e-commerce niche. We all know that e-commerce has exploded in the last number of years, and we need more accounting professionals that are experts in this so that we can help more business owners be successful. Okay. If you have any questions, you can reach out to me, but let's talk about clearing accounts, shall we? A clearing account, it's sometimes called a holding account. It's kind of an interchangeable term. A clearing account is used when your sales are brought into the books in a manner that doesn't match how the payouts are coming into the bank. So for example, Shopify Payments does a lump sum deposit into your client's bank. And depending on which integration app you're using will determine if you need to use a clearing account. If, for example, you're doing individual sales receipts into the books, you wouldn't enter them directly to the bank because you're not going to see all of those individual items in the bank, just a lump sum deposit. In this case, you would need a clearing account for all of those sales receipts to go to. Then you would do lump sum transfers into the bank that match the deposits. The goal of the clearing accounts is to make your reconciliations easier and more accurate. So let's look at some of the common integration apps and when we would need or want to use a clearing account to streamline the process. So with A2X, or lump sum entries, let's use A2X. It's always my favorite. If we look at Shopify Payments, A2X is going to do a journal entry that perfectly matches to the deposit that went into the bank. In that case, you don't need a clearing account. You just send them over, click match, match, match. Life is good. But let's think about again, if we're using A2X, but this time we're using a gateway like PayPal or Moneris. Shopify doesn't know when a payout happens on those platforms because it's done outside of Shopify. So A2X cannot summarize by the payout. It doesn't have that information. So in this case, A2X lets you choose how you want to handle that. Do you want a daily summary of sales with that gateway? Do you want a weekly summary or a monthly? A2X will summarize that into one journal entry based on the period. So in this case, the deposits into the bank would happen when the client transfers money from PayPal into the bank. So it has no direct relation to the sales that happened on the e-commerce platform. So in this example, you would need to use a clearing account when you're doing PayPal with A2X. A2X journal entries would go into a PayPal clearing account, and then you would do individual transfers into the bank. With PayPal, again, because on the bank statement, it's individual. In this example, we would do little transfers out of PayPal clearing into PayPal bank. So now when you pull your PayPal statement, it actually is in exactly the same way that we see on the statement. And that is the goal, that there's no confusion. You can look at your statement and what you've done in the books matches it. And that's the power of using a clearing account. We would also want to set up some nice bank rules to automatically process those fees so you're not doing this work manually. And when, of course, you have multi-currency, you've got to be careful, at least with QuickBooks, because of the multi-currency issues. Now with Amazon will summarize just like Shopify Payments, and you will be able to not have to have a clearing account. So with A2X, that's awesome. And we love that. Makes our life easy. I love that I can just send things over, go to the bank feed, click match, 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 and I'm done. And then it's the third-party gateways with A2X that you do need to use a clearing account. So let's quickly look at individual apps that would send over individual receipts. So these ones are doing, sales receipts being recorded in the books, or they're doing invoices and payments. So again, we want to think about how is the money actually coming into the bank to determine if we need a clearing account. Think about Shopify Payments. It's doing a lump sum deposit into the bank for the sales less the fees. Since this app is doing individual sales receipts, right? Now we need a clearing account because we have a misalignment between how the money is coming in and what we're doing. Each sales receipt would be recorded as paid from Shopify payments. And it would go into that Shopify payments clearing account. Then based on the deposits that went into the bank, transfers are done from clearing to the bank to match up. Now let's think individual app again. If we were doing PayPal, right? Since these apps are doing individual receipts, and when we look at the PayPal bank statement, it's individual. In this case, we don't need a clearing account because it's coming in exactly the way we need it on the statement, which is lovely. We can again set up bank rules wherever possible to speed up our work. Okay. For Amazon, because Amazon is doing lump sum deposits and these apps are doing individual transactions, here we need a clearing account. So I hope that this makes sense to you. You know, you're trying to streamline your work so that you can easily complete a reconciliation faster and you can identify any issues easier when you are using these clearing accounts. So I know this was very quick and we covered a lot, and believe me, there's so much more that we could talk about even just on these topics. But really, when it comes to your payment gateways and clearing accounts, it's about understanding the workflow that leads to an effective reconciliation that is audit proof. Everything ties together. How the payment gateway works, how the integration app works will determine when you want to use a clearing account, and it will help you to determine the right workflow for you. And having that right workflow can save you incredible amounts of time, stress, and headaches. E-commerce bookkeeping and accounting is complex, but we strive to make it easier for both e-commerce sellers and for the accounting professionals who love them. And if you are an accounting professional, I invite you to grab our free ebook. It's my gift for you. Actually, anybody can grab that. It's useful for anyone. Or, of course, if you want to get great at this, take the leap and come and join our academy. So we have just a few more minutes, but I'm happy to stay longer to make sure that your questions get answered. And I'll just sort of be quiet for a moment, pass it to you, Ellen, and we can see what questions everybody has.
Yeah, so we have a few questions that have come through, and thank you so much. You are incredible. It's just so easy to listen to you.
Oh, thank you.
So firstly, someone's asked if we can have access to a recording of this webinar, and yes, so everyone will be receiving the recording, and also we will send the slides so you can kind of work through it. There's some good content on those slides. So look out for that in your inbox, and you will also hear from Teresa. So cool. So the first, are you just QBO or do you also have Xero in your course?
It is just QBO because we only do QBO in our firm. So
yeah,
sorry, I wish we could help you with that, but we can't. But
that's all good. We will look to do something there for Xero, because I know.
Yeah, I do have to say that, you know, the majority of what we are teaching, it doesn't matter whether you're using QuickBooks or Xero or what you're using, the strategies and the learning can be applied to either. It's just the step by step. Like, you know, what does the reconciliation screen look like, or how do those connections work? So a lot of it still works no matter what, but it is specific to QBO.
Awesome. Is there a good, this is maybe a bit of a question, but is there a good way to get a balance to reconcile for Shopify within Shopify? I don't quite understand that.
Way to get a balance to reconcile to for Shopify. Absolutely. So if you're talking a sales reconciliation, that's actually, we're teaching that next Thursday in the Academy. Yes, you do want to go into Shopify and get the finance summary. So it's under analytics and then reports and search for summary. And you will be able to use that to match up to the profit and loss in the books to make sure that your sales are lining up. So you want to look at your sales, your refunds, your discounts, your shipping income, and your taxes to make sure all of that has come into the books accurately. So yes, you can definitely do that. And we want you to do that. Very important.
Awesome. Hey, some people are having issues accessing the ebook. So what would you be able to send that to them in an email afterwards? That's possible?
Absolutely.
Yeah.
Actually, what happens when you go to the site, as soon as you try to leave, a little pop-up comes up and says, enter your email to get the ebook. It's just the way the site works. So you will definitely get it.
Cool. Thank you.
Yeah.
Awesome. Okay, so a couple more. And again, this might be a long-winded answer, but how do you import the transactions when you have multi-currency?
Yeah, Janice, I would love to answer that, but I would actually need to hop on a webinar and it is quite in-depth. And I would love to teach you that. We just obviously can't cover that in a couple of minutes. If you need help specifically, you can just email me. We can either set up a time to look at it together, or of course we have the Academy that can help you through that, whichever is good for you.
Oh, you're so kind. Thanks, Teresa. And then lastly, anonymous attendee, what are the preferred apps for connecting Stripe with QBO?
That's a great question, and it depends. If my client's selling on, it depends on what platform they're selling on. My go-to for getting information in is A2X, but A2X does not connect to every single thing. So in the cases where A2X does not connect and grab that data, our favorite to use is Dext Commerce or Cinder, but there's Bookkeep. There's a lot of them out there that will do that. And really, you have to look at how the app works to decide if it's the right one for you, because each of them does things slightly differently. And you want to make sure that the one you choose is actually going to bring in the data the way you need it. All right.
All right. Well, thank you again, Teresa, for sharing your expertise with us. We're very fortunate. And hopefully everyone got something out of this. And yeah, keep your eyes on your inbox. You'll be sent the recording. But otherwise, have a lovely afternoon, day, evening, wherever you are. See you, Tim. Bye.
Bye for now.